It's now my great pleasure to introduce to you today's special guest presenter, Michael Kirby. Michael has been the Managing Director of XO Accounting for over 7 years. He's accredited with the Tax Practitioners Board and is a certified practicing accountant. Michael may be familiar to you as the reigning award winner of the Professional Services category of the 2019 City of Melton Business Excellence Awards, or as a member of the Venture Melton Business Network. Michael has carved out an impressive career in business development and financial analysis and shows a real passion for helping new and small businesses become established and profitable ones, as illustrated by his recent assistance with our hothouse participants in our program this year. So it is indeed gives me a great pleasure to welcome Michael as he shows you how to get more customers in your business and how you get more time in your day. Over to you, Michael.
Thanks, Peter. Thank you to the Melton City Council for this opportunity. So just to introduce ourselves, XO Accounting, our aim is to assist you to reach your financial potential. Our core sort of beliefs are time, money and team. What we try to do is create more time for you, which is a valuable resource, make money or save you money, and also become part of your team. As Peter said, we are a CPA practice. We're a platinum member of Xero. We actually are the reigning Xero Partner of the Year for Victoria. We're also members of Capricorn Co-op Group. So just to kick off, when we've got clients, we look at the building blocks of a business and we go through these with our clients. Every part of the block is important. What we're looking at really here today is the middle and part of the bottom tier for the building blocks of business. So what we're going to focus on today is what we call the business chassis. So it is all about generating leads and also sales, but also making sure that your time and your investment in generating those is maximised. So by understanding the business chassis, you actually get a better bang for your dollar in developing your business, and your business profitability is going to grow much quicker by understanding all the components of the business chassis. One of the things that we find are clients are too worried about their outputs. Outputs are, what's my revenue? What's my profit? Rather than focusing on inputs. So as we go through the chassis, you'll understand what I mean by those. So at the top of the chassis, and what we're going to do here today is we're going to use my own business as an example. So we've gone from 5 years ago from having zero income up until this year, just gone, over $2 million in income. So what we'll do is basically show you what we've done internally, and hopefully some of those lessons you can take to your own businesses. So generating leads, there's a number of different ways to do it. Google, we get a lot of clients coming to us via Google. We focus a lot on making sure our SEO gets us at the top. And we don't do that by paying someone else. We do that by our own effort in posting blogs, articles, videos to basically increase our score. We also do social networking. So all that basically comes into Google as well. So there's a crossover benefit between that. So again, we're constantly posting articles, videos. This is basically to help communicate with potential clients, communicate with existing clients, and also build up our reputation as an expert in our field. One of the biggest areas that we get our clients from are referrals and our own networks. A lot of people are afraid to ask for referrals. We ask all the time. We have a referral program in place. We thank our clients and our business partners who refer to us. We reward them. They don't ask for it. We actually send them rewards, which they really appreciate. So we actually have that going all the time. That changes all the time. We also have used from time to time lead generation companies. They're very good. They sort of get us warm leads. We generally will use them when leads start to dry up, or if we've got a promotion, we use them to do the grunt work in communicating with our clients. Another one that we get a lot of clients from is just walk-ins. Making sure that your business is presented well. From the outside in, people are going to look in. If they see a professionally run business, they're more likely to come and use your services or purchase goods off you. If it looks like it's a mess and disorganized, they're going to keep walking. Conversion rates. This is where I had the biggest problem. So as you can imagine, accountants, we're not great sellers. We're great with numbers, we're great with reports, but selling's not our forte. Early on when I first started, we were getting around about 30 to 60 leads a month. My conversion rate for the first 4 months was nil. I actually got no clients to sign up. Walked away from meetings thinking, oh, they're going to sign up, no worries. Not one of them did. So what I did is actually went off and started to learn about what I needed to do to actually increase my conversion rates. We were getting leads in the door, but I just couldn't convert them. It wasn't our price because our prices were competitive. It wasn't our service because, the services are what people wanted. It was me, basically, I just didn't know how to actually communicate and sell to our clients or potential clients. So what I did was did some coaching with my business coach. And what we sort of looked at was, he sort of talked about to get a client to come across, you've got to actually get beyond their resistance to change. And everybody's got that resistance to change. So, there's a bit of a formula that we sort of worked out was the dissatisfaction, the vision, and the first steps. They have to be less than the person's resistance to change. So, what we try to do is make it easy for people to come across. We make it easy for people to, we understand what they're looking for, and we try to put a solution in place. So by increasing, improving that communication aspect and sitting down and listening to the clients rather than trying to sell to them, we now sit down and ask them what they're looking for, why they're actually currently dissatisfied with their current accountant, what are they not getting that they want. Sometimes it's, doesn't call me back, I'm not happy with the result, it's costing me too much money. It might be just a personality thing. So understanding what their dissatisfaction is, we then basically try to sculpt a solution for them. That's actually increased our satisfaction rate from 0 up to 75%. That caused us another problem where our conversion rates were too high, meaning my prices were too low. People were happy with me, they were happy with the company, they were happy with the services. The conversion rate should be around about 55 to 60% if your pricing is right. So we actually did a review of all of our pricing. So if you get your conversion rates right, you've got your leads coming in, that leads to an output, which is new clients or customers. The next thing was average spend. So you've got the client in the door, you've actually spent the time, the money, the effort of getting the client in the door. Now the focus for us was, how can we actually get them to spend more with us? Then the other thing was the number of transactions. How many times are they actually purchasing from us? So the idea there is we actually tried to find some ancillary services that clients wanted that weren't being provided that we could actually provide. That led to an actual increase in the number of transactions. We reviewed our fees, which led to an average increase in the average spend. All of that basically meant that our revenue basically goes up. So as we work down this chassis, you can see there the leads, the conversions equal to new clients, the average spend, the number of transactions leads to revenue. The next important one is margins. What we found here is we actually went through and we found that we were actually pouring a lot of dollars down the toilet, basically. So we actually hadn't reviewed our expenses of our business, and there was enough business that we took over. We hadn't actually, they hadn't actually looked at their expenses for about 5 years. So what we did is we actually went through and looked at every line of our expenditure and reviewed, did we need it? Could we get a better service? Could we get a cheaper service? So obviously the lowest hanging fruit there was telecommunications. So we were spending something like $3,500 a month. We actually got that down to $800 a month fixed fee. There was no more variable cost. Now we saved ourselves almost $30,000 just by changing a supplier and getting the same service with someone else. That meant we saved money and we actually had more certainty about our costs going forward. We looked at our electricity. Again, hadn't been done. $800 a month we saved by just changing providers. So what we do now is we actually go through every year, once a year, and we review every expenditure line and see, is the expenditure required? If it's not, we eliminate it. Is there another service provider or an alternative? If there is, we'll find that and we'll actually employ them, and our margins continually improve. The good thing is, well, the main thing is, that's the lowest hanging fruit. So if you can get your margins right, you've got your clients coming in, you've got your revenue being generated, and now you've got your profit. For us, it's then, well, which one do we actually look at first? We looked at the margins first. So, with our clients, one reason being is it's the lowest hanging fruit. It's where we've got direct control over. So we actually look at the margins first. There's no sense in getting more clients, more sales, if your margins are wrong and you're making a loss or you're not maximizing your profit. So the important thing for us is making sure the margins are correct before we sort of go too far down the track. Average spend and number of transactions are jointly related. Trying to get your best bang for your buck, and also I think it actually adds to your story when you're going out to potential clients. If you've got a better service coverage where they can go get more services and they feel like they're being looked after, you're going to get a better rapport with your clients. Leads and conversion rates are last. Now we've got everything in-house really purring. So what we try to do then is, okay, let's start generating the leads. Let's start getting the conversion rates up. So it's basically working out what's where we've got the direct control over, which is 1, 2, and 3 there. 4 and 5, you can control it a little bit. However, in the end of the day, it's going to be the client or potential client's decision whether they come to you. So they're in control. Now, the beauty of the business chassis is the geared effect. So if you have a look at, if we look at the current situation, we've got 10 leads, coming in on a regular basis. We're converting 30% of them, which means 3 new clients. The average spend is $100. They're only spending once, $300 in revenue. The margin's 15%. So our profit is $45. So that's our current situation. Let's say that we actually looked at our margin first. So we've actually increased our margin or improved it by 5%. So you can see there the effect of that is 33% on our profit. Okay, it's just by a small percentage increase in the margin. If we have a look at every function of the business, so you can see there we've actually increased the leads by 2. We've improved our conversion rates. So now we're getting 6 new clients. The average spend is up to 110. The transactions are 1.5, which means $990, not $300. The margin's 20%. So now we've got 198, which is 340% improvement in our profit. So if you can imagine that in your own business, it has a dramatic effect fairly quickly with the smallest amount of effort. By putting all your eggs in one basket, you'll get a return on your effort. However, if you look at trying to get a small improvement in each area, you're going to have a much better effect on your business. So what we do with our clients is we go through all of this with them. We've got systems that allow us to do all that, and we can actually analyse their business, and we actually put a plan in place. So how do we do it? Really, it's all, with us, we're very systematic. We use systems that are live in real time. There's no sense having information that's a week old, a month old, a year old. You need up-to-date information, and the systems are out there these days that you can actually do that. So we use a number of different systems to be able to do that. All of our systems are integrated, which means they all talk to each other. So all the information coming through, basically they all talk to each other, and it makes our life a little bit easier. We're also getting into the area of smart or AI technology now. Systems like Xero now has AI being built into it, so the system itself will actually do a lot of the grunt work and processing for you. It allows the business owners to actually work more in the business rather than on the business. So our main sort of thing is having all these systems that talk to each other, that we can actually see live 24/7 with ourselves, but also with our clients. We plan. We have budgets and business plans. So, these can be very good for a business, or they can be very bad. A lot of business plans, people spend a lot of time and effort developing. They're, hundreds of pages long, and they sit in the top drawer gathering dust. Plans that we sort of develop are more, they've got to be more task orientated. They have to be direct action. So trying to work out what are the things you need to do, when do you need to do them, who's going to be responsible, what's the outcome of the plan. So can we measure, okay, we're expecting to get 6 new clients, we only got 4. Why did we only get 4 new clients? Is it our conversion rates that are down? Which brings us to report and measure. So we report on everything that's financial and non-financial. So financials obviously are your income, your expenses, and your debtors, your creditors, your cash at bank, those sort of things. Your non-financial data is just as important. So how many leads did you get in? Where did they come from? What was your conversion rates? What sort of services are they looking for? How many people have come back and bought a second time? How many people have referred clients to you? So all those sort of financial and non-financial data do have an impact on each other. Measuring them, will actually give you some sort of indication of future sort of action. So a lot of your marketing sort of activities isn't going to have an impact directly right now. It could be 6 months, it could be 12 months. We've had clients come back to us 2 years later and say, listen, I saw your presentation at X, 2 years ago, had you in the back of the mind, not happy with my current provider, I want to make a change. So, keeping that information and understanding where they're coming from is very important. Every plan and every budget shouldn't be written in stone. You should be able to review that and adjust it on a regular basis. I'm not saying every week, but we review ours on a quarterly basis. We don't go any more than 12 months in advance. We do have a 3-year goal in mind, but however, the more detailed plan is 12 months. We break it down to 3 monthly and then weekly tasks orientated, which we then we're then made accountable to. So being accountable is another thing. One of the things that really helped me was having someone who I'm accountable to. The beauty of that was I'm the sole owner of the business. The buck stops with me, but it was great to have someone that on a fortnightly basis I had to front up to and explain what I'd done, why I'd done it, what I hadn't done. So it sort of gave me more incentive, even though the incentive should be there. But by having a business coach for me was fantastic. A bit like an athlete has their coach, a business person should have their coach as well. Someone who basically holds them accountable, basically does the tweaks, points them in the right direction. They don't control the business. It's a sounding board more and a trusted sort of relationship there that we do have with our advisors. That's it.